Good afternoon, traders, and welcome back to the Hot Stocks Outlook for February 22nd, 2019. Hope you're all having an excellent week out in the financial markets, and as always, plenty of great opportunities to cover as we've had a really great wave here all through January and February as far as equities and crude oil moving higher. But we're going to start here with, we got air products and chemicals, Garmin, Harris, so actually a defense company there. We got stamps.com and also Ulta, which we've been checking in really every other week or so here in the Hot Stocks Outlook. So starting here at air products and chemicals, what we have here are daily bars representing all the price action here. So every single one of these bars represents a full trading day. And against those bars, you see that there's a couple of indicators. There's a black line and a blue line. At the bottom, you see there's this green and red indicator. And then you also have a predicted range. So a predicted high and low for each and every trading day. But let's start here with the predicted moving averages. And what this black line that you see on the chart is actually a regular simple moving average. So that's a very common technical indicator, very easy to plot. And it's a good summary of where prices in a particular market have been over a given period of time. But the problem is that it's not predictive at all. It only looks at past prices and only looks at the one solitary market that you're doing some analysis on. But what we're comparing that regular moving average to is this blue value against the chart. And what that value is a predicted moving average. And it's actually generated using predictive data generated from the artificial intelligence, more specifically neural networks found within the VantagePoint software. So what that technology is doing is looking at 30 to 35 other markets, a very large number of markets that are known to influence and drive, in this case, the target market, air products and chemicals. So that could be things like, the dollar index, crude oil prices, ETFs, other related stocks. And so what the technology is doing is understanding those important market relationships and incorporating that into what is expected to happen next. Because the reality is that markets share very important correlations, and some markets have leading relationships, some have lagging relationships, and you really need technology to help figure that out and keep you on the right path here. So here in air products and chemicals, you see this blue line or this blue value. Once it crosses above the black line, it's suggesting that, look, average prices are expected to move higher, that this moving average is expected to start grinding higher towards that predicted moving average, and therefore pretty much in a summary saying, look, the trend is up. Now, in addition to that predicted moving average, you also have this indicator at the bottom. You see we go from a green to a red, back to a green. And this indicator is also derived from that neural network process, but it's really a 48-hour indicator. So it's very short-term strength or weakness in the market. You can think of it as a couple trading days as far as if you're going to see some short-term strength or short-term weakness. Now, how I like to really look at this, and we can, at the end of this, really bring in the predicted highs and lows to help us as the market trades forwards and where to be buying, where to be taking some profit. What's really helpful is when this neural index goes bearish, what I often like to do is say, okay, well, it's very likely that we'll trade below that predicted moving average, right? We can trade above, we can trade below an average. That makes sense. But when that neural index goes to a red, you may see some weakness, but as long as that blue line is still above the black line, the trend is still up. So you don't want to jump off of your trade and get out of a really great opportunity. So last but not least, though, we'll bring in these predicted ranges. So this predicted high and low, and you can actually see the actual prediction against the then actual market data that came through. So this trading day here, where you see the blacked out bar, we'll eventually get a candle to fill that in, and we'll see how accurate that prediction is, but we can certainly see how accurate those previous predictions were. And what this does is it gets you in a mode to understand that, okay, well, if I'm going to be long in the market, where do I want to be looking to buy into the market? And you're going to get a little volatility. You see this day we come much lower, but the trend is still up. You're still well above those predicted moving averages, and certainly want to be in a mode of buying and taking profits on longs with that trend being up. And you see you got 1, 2, 3, 4, 5, 6, 7, 8 entries into a market that's moved up very substantially over a fairly short period of time. But more importantly, that after each one of those, 7 or 8 entries that you have in the market, within 2 trading days, you're trading higher. As long as that predicted moving average is still above, the trend is still up. You see about a 13.5% move, or $21 per share to the upside here on APD, Air Products and Chemicals. Now, same logic, same approach, bring that over to something like Garmin. And we just had so many markets sharing this correlation, and that being a correlation with the S&P 500 and the dollar index, these very important markets, but you're just seeing a lot of stocks move up in tandem. and all at the same time. So had you missed this opportunity, see at the beginning of the year, you have those levels to help guide you so you can make the most of an opportunity. But it's the exact same approach. You see this blue line stays above the black line. You never get a cross, but you get a little bit of weakness where you trade below these predicted moving averages or run sideways. But the trend is still very much to the upside. And you see a lot of strength here coming in from the neural index, suggesting, okay, well, look to be a buyer in the market. And what you really don't want to have happen is you get involved in trades maybe early in January at that really great onset of a lot of these opportunities, but you don't hold on to the opportunities because of one reason or another or volatility. And you see in this situation, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 entries over the past couple of months, but probably more importantly, the trend is still up. So what you want to do is really make sure that you don't miss these great opportunities by getting out of the market or taking profits too soon when you've got a lot of strength as far as the trend and that short-term price action. And we see just a fantastic move here, 32% move higher in shares of Garmin. And this thing really starting to break out to the upside. Moving on here to Harris. So, exact same approach. I know Harris back in 2008, we had Lockheed Martin and Harris had a really great run in the July period. And it looks like we're getting a very nice run here with our crossovers again coming at that early part of January. And very clearly, you see you get a little bit of sideways action when these neural index goes bearish or gives you that conflicting signal. But once you have that, really everything in line, the trend is up, neural index up, you really want to make sure you're involved in those markets. And again, we can look at, okay, well, shorter term traders, how might they approach this? Well, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 entries into the market where, again, within a day of getting into the market, you're already up and you're moving to the upside once again as that trend continues higher. So phenomenal, 25% move to the upside, $33 per share. Obviously a great time in that January period. You had so many markets coming with crossover to the upside, get long, buy some call options, but really take advantage of a lot of these markets are moving up pretty tremendously after selling off and getting some cheaper prices, from October to December. Now things turning around. It's a great time to get involved. Here in stamps.com, same thing. You see at the end of December, beginning of January, all of this lining up and saying, look, you really want to go ahead and get long. But again, what I like about this neural index is letting you know that, hey, you may trade above and below that average, but when you can prepare for some volatility and weakness, you're going to do a lot better job managing it and understand, hey, hold on here. You still have the trend is still up. The predicted moving average is still well above the actual moving average. And make sure that you're in in this move for the duration of the couple of months here that we've had some really great buying opportunities. So we see here pretty much the bulk of this trade, 32% move to the upside. But again, those shorter term traders can really make the most of these opportunities and be buying really along the way. And what's really effective is using your profits from getting that good entry, to really, be adding to your positions with those profits and making a lot of money as the trend continues, but also, having limited risk at that point should things turn around and fail. Here, lastly, in Ulta. Now, we talked about this just week after week after week, and I'm bringing it back just to highlight that. Again, it's not so much about, again, the crossovers. I mean, that's obviously where we want to get in on trend trades, and trend traders should be, running their scans for those crossovers and getting in when they come through. But so much of the value here is in making trade adjustments as the trade continues. And so we see here in Ulta, we covered it, really just week to week and looking at those predicted lows. And I just want to go ahead and do that again because, where do you want to be a buyer in this market over the past week? Well, buying at these predicted lows, not a bad area to get involved. You see moving up towards those predicted highs, you're getting, 1.5%, 2% moves there just on a little day trade. So it's a really great opportunity, especially if you've been involved here for a long time, to go ahead, add in at those levels and really make a lot more money. But again, it's more of the trade management that you're using these really great levels to guide you moving forward so that when those conditions change, you can adapt and you're ahead of the entire situation and making intelligent decisions really regardless of what's going on in a particular market. So here we have Ulta up 27% over this longer period where we had so many markets moving up 20 and 30%. But just over the past couple of weeks here, there's been just great opportunities to be buying at these predicted levels. And just what I want to highlight is, when we started highlighting this market, way back in, late January, maybe early February, we didn't know what any of the predictions would look like over this period of time. but they're still guiding you forward and doing a good job of letting you know where you want to come into the market and how you want to manage the opportunity depending on your trading style. If you're short-term, longer-term trading options, use the trend and these shorter-term indicators to really be very efficient with executing that strategy. So with all that covered, can't wait to see you again next week in our Hot Stocks Outlook. But this has been the Outlook for February 22nd, 2019. Best of luck to all you traders out there in the markets. Thanks again, and bye for now.